Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
Hey guys, let us look at the response to question 4 of the Principles of Accounts 2021 paper. Part A reads, the following information relates to Bevan, a production line worker for the month of May 2021. Payroll information, total number of hours worked for the month, 185 hours. Statutory monthly deduction, $190. Voluntary monthly deductions, $200. National insurance deduction per month, $120. Regular pay rate per hour is $20. So $20 for each hour. That is the normal hour. Overtime pay rate per hour is at time and a half, which means that for every extra hours work outside of the normal hours, the rate per hour there is time and a half. Total number of hours in a regular work week is 40 hours. The final information there assume that 4 weeks makes up 1 month. So we're going to move into part I of the question. Calculate the total number of regular hours which Bevan worked for the month of May. In order for us to do that, we need the total number of hours in a regular week, which is 40, the total number of weeks that make up 1 month. And once we have that, we can do our calculation, and we're going to use the formula number of hours per week multiplied by the number of weeks that would make up the month, and that is 40 hours times the 4 weeks, and that gives us 160 hours. So Bevan worked 160 regular hours for the month of May. We're now going to move into part 2. Calculate the total number of overtime hours which Bevan worked for the month of May. For that calculation, we'll need the total number of hours worked for the month, which is 185 hours. And we have calculated in part A the total regular hours. Now that we have that information, we can then proceed to do our calculation, and that is the total hours worked minus regular hours, and that is 185 minus 160, and that gives us 25 hours of overtime work by Bevan. We are now going to move into part 3 of the question, and part 3 reads, using the information provided in the table and your answer from parts AI and 2, calculate Bevan's net pay for the month of May. So to get the net pay for the month, we have to ascertain the gross pay, and then we move into ascertaining the net pay. So we're going to start by looking at the gross pay first. And the formula for that is regular pay plus the overtime pay, which gives you gross pay. Now that we have the formula, we're going to move into doing our calculation. For the regular pay, what we will need is the regular hours times the rate per hour, which is 20. And for the overtime, we need the overtime hours of 25 multiplied by the rate per hour, regular rate per hour, multiplied by time and a half, which is 1.5, because it was indicated that overtime pay rate per hour is time and a half. So here is our calculation for that. The 160 times the $20 per hour to get the regular pay. To that, we're going to add the overtime pay, which is 25 times the $20 times the 1.5, and that gives us a result of $3,950. So that is the gross pay. Now we're going to move into calculating our net pay now that we have the gross pay. To get the net pay, remember, that is gross pay minus total deductions. From the question, the total deductions would comprise of the statutory monthly deduction of 190, voluntary monthly deduction of 200, and the national insurance of 120. So we're going to add all of that together, minus that from the gross pay to give us our net pay. So here we go. 3,950, which is the gross pay, minus the total deduction, which is 510 in total, and that gives us $3,440. There's another way in which you could respond to the question, and that would be by way of using the payroll register. And this is it, the name of the employee, the regular pay, which would be the 3,200. Remember, that was the regular hours multiplied by the rate per hour. The overtime pay, which is 750. You would add your regular pay to your overtime pay, and that would give you $3,950 for your gross pay. Your statutory deduction was 190. And remember, this was already calculated for you in the question. Voluntary deduction is $200. And the NIS right there is 120. So having entered your deductions, 190, 200, plus the 120, that would give you a total of $510. This 510 now is subtracted from your gross pay to give you your net pay of $3,440, and that is your response. Now we're going to move into part B of the question, which reads, state one example of a statutory deduction. We have income tax, we have education tax, we have national housing trust. Those are examples of statutory deductions. Remember, statutory deductions, these are stipulated by law. You have to pay these out of your pay, whether salary or wage. Part 2 of B, state one example of a voluntary deductions. Voluntary deductions, these are by choice. The employee's decision to take these out of his or her pay. Examples of those are union dues, savings. There may be loan installment that you have to pay monthly. You have health insurance, etc. Those are just some examples of the voluntary deductions. And we're going to move into part C of the question, which reads, John, the proprietor of Foot Soles, a business which trades in shoes, has supplied the cash projections data shown in the form on page 18. Additional information, Foot Soles forecasts that the bank balance will be $5,000 on May 1st, 2020. Prepare cash flow projections for Foot Soles for the 6 months ending October 2021 by calculating and completing the appropriate spaces in the form provided on page 18. Include all appropriate headings and labels, fill in necessary totals, and include any missing sections for the completion of a cash flow statement. So here we are with the cash flow statement, that incomplete cash flow statement that was provided. To complete this, the first thing that you need to enter is the title, which reads Foot Soles Cash Flow Projections for the 6 month ending October 2021. Now, the beginning of the cash flow, we're presented with 6 months and they're labeled from May to October. The first set of information that we recognize here are cash sales, receipts from credit customers. So therefore, that type that can be labeled cash inflows, or you could label it as receipts. The next thing that we're going to do is to enter the total inflows for each month. For May, that is a total of 45,000. For June, 21 plus 11,000 give us 32,000. For July, we have a total of $39,000. For August, that's a total of 34,000. For September, that is 30,000. And for October, we have a total of 31,000 So those are the total inflows for each month. We are now going to move into the next section, and this section, the title is cash outflows, or you could call that payments. Now, we're going to total the outflows for each month. The first month there, which is May, we have a total of $28,000. For June, we have a total of 24,000. For July, that is a total of 61,000. August payment total is 26,000. September, we have a total of 23,000 for payments, and for October, we have a total of $20,000. Note that we have the totals for each month receipts, and for the payments, we're now going to move into the balancing section of the cash flow, and we begin with the opening bank balance. And from the question, it was indicated that the opening balance for May is 5,000. So we're going to begin with that 5,000. To that 5,000, we're going to add the receipts, the total receipts for that month. And for May, that is a total of $45,000. When that is added, we get a total of 50,000. From this 50,000, now we're going to subtract our payments, so less payments. The payments for May is 28,000. That's the total there. When that is subtracted from that 50,000, we are left with the closing bank balance, and that value is $22,000. This closing bank balance becomes the opening bank balance for the next month, which is June. So that's 22,000. To that 22,000, we're going to add the receipts of 32,000, and that gives us a value of $54,000. From that, we less the payment of 24,000, which gives us a closing bank balance of $30,000. This 30,000 will become the opening bank balance for the next month, which is July. So that is 30,000. To that, we add the payments of 39,000. This 39, when added, give us 69,000. And from that, we less the payment of $61,000, which gives us a closing bank balance of $8,000. This 8,000 becomes the opening bank balance for the next month, which is August. So that's 8,000. To that, we add the receipts of 34,000, which give us a total of $42,000. From that 42,000, we less the payments for that month, which is 26,000. When that is subtracted, we have a closing bank balance of $16,000. Now, this 16,000 become the opening bank balance for September. To that 16,000, we add the receipts of $30,000, which give us a total of 46,000. From that 46,000, we subtract the payments of $23,000, and that gives us a closing bank balance of 23,000. This 23,000 now become the opening bank balance, and we're into the final month, which is October. That's 23,000 for the opening bank balance. To that, we add the receipts of 31,000, which give us a total of 54,000. From that 54,000, we less the payments of 20,000, and that gives us a closing bank balance of $34,000. So just to summarize what was done in order to complete this cash flow statement, we started out with the heading right there. Then we move into entering the title for this section, which is the cash inflows. Remember, that could have been labeled receipts. Having entered that, the totals for each month was recorded. Following that, the title of the outflows was entered. Remember, you could have used payments. The payments were recorded. That's the total of each month. And then we move into the balancing section. This $5,000 was the opening bank balance given in the question. So that was used to begin the balancing section of the cash flow statement. Having entered the opening bank balance, this 45,000, which is the total receipts coming from May, was added to that, which gave a total of 50,000. Then the total payments is then subtracted to give the closing bank balance of 22,000. That 22,000 now becomes the opening bank balance for the next period. So we're seeing where this 22,000 was used to begin the month of June, the balancing section for the month of June. The $32,000 is then added. That's the receipt. From that now, the payments of 24,000 was then subtracted, and that gave us a closing bank balance for the month of June of $30,000. So that is the motion in completing the balancing of section of the cash flow statement. So you start with your opening balance, add your receipts, less your payments, and that gives you the closing balance. Do remember, the closing balance from the previous month becomes the opening balance for the next month. Okay, so that completes the response for question 4.
Like, share, and don't forget to subscribe.